So what I have planned is to teach Elliott waves, but Elliott wave is something which needs continuous two classes. It cannot be covered in 1 hour, 1.5 hour. So almost 2 hours needed. So if possible, today I will cover some part, and tomorrow's session is still little bit of doubt that if I'm available or not, but I will try. I will inform before, like tomorrow morning itself I'll inform. But today, as much possible, I will stress the class. So not to waste any more time, we will start today with. I think we have covered simple moving average, exponential moving average, and stochastics, RSI, and I think Bollinger Band, CCI, parabolic SAR, yes, ATR. So almost, I think 8 indicators are covered. Is MACD is covered at MACD? No, no, I don't think MACD is covered. So let's fast start with ADX. Today we'll start with ADX. Then we'll move to MACD and then to Elliott waves. Elliott wave is something which is very interesting and but needs practice. So moving to ADX, ADX is average directional index. You might have heard because from last session I could judge actually what is the strength of this classroom, because everyone is almost familiar to everything and just needs the strategy which is being followed by us and deeper into technical analysis, because I think most of you are trading from quite few time. But as not true, I know few people in this group who are also new, so we need to cover from the basics. So okay, let's start with ADX. ADX is average directional index. No need to write the full form, and we will not go to the calculations. We will straight away. Please, one more thing I have forgot to mention. Please keep a notebook with you. I'll be sharing few, like what are the strategies normally being followed in the market for ADX, and if you're moving to next one is MACD. Also, I will tell you what are the strategies being followed in the market, and after that depending on that strategy you can build up your strategy also. So moving to ADX, its average directional index. ADX is a lagging indicator. As in very first class we have discussed about types of indicator. It's a lagging indicator. It gives signal little bit late, and what does ADX does is it measures the trend strength without regard to trend direction. It does not shows the trend direction, it tells the trend strength. It does not gives a buy or sell signal. It tells what is the strength of the trend, uh, be it a upward trend or a downward trend. It tells the strength. One very great thing about ADX is it is actually being calculated, being combined two more indicators, that is plus di and minus di, actually positive directional indicator, and the minus di is negative directional indicator. So ADX is a combination of, just to mention, I don't need to write all these things, but when I will tell you to write these those strategies which is being followed, that you need to write. This is ADX is combination of plus dx and minus di, that is positive directional indicator and negative directional indicator. So now coming to the calculation part, we will not move deeper into calculation, but still the positive directional indicator is calculated based on difference between it is the positive directional indicator is equal to the difference between current high and previous high. over a period of time. And negative directional indicator is calculated from current, it is the difference between current low and previous low, again in a period of time. ADX normally ranges between 0 to 100 and is usually calculated based on 14 time period. It's the default calculation. Actually, in many previous classes, it's being asked that we can change the time or not. What is the best suitable timing? It actually comes from trial and error. You can keep changing the time, and you can see what exactly is working for you. So by using that, in previous class, I think that is whole moving average is being taught by Nishant, what exactly it is. So as he suggested, it was for I think 21 days. I exactly do not remember. So he suggested for 21 days, but it's very frequently it's being seen. It's taken for 19 period. So 21 period is something which is being used by most of the technicians in the market. So again, ADX ranges between 0 and 100 and is usually calculated based on 14 time periods. And even 20 is used as key label for analyzing ADX. So as already I have mentioned, that ADX enables one to quantify trend strength. It quantifies the trend strength. ADX helps to identify strongest trend and even the range bound condition. ADX also tells yes, this is if it's a downtrend, then it tells yes, the downtrend is strong and it could carry for few more days. And it also tells us about the range bound market. So before moving to more the strategies which is being followed in ADX, please I think everyone might be knowing there are two types of market. That is, one is trending market and the other one is trading market. The trending one is this one, it be it a upper trend or downtrend, but the trading market is this one. The range bound market is called trading. So as I will use this quite frequently today, so I thought to give you details of this. So please keep your notebook and start writing few commonly used strategies in the market. The first one is, it is for a trending market. The first strategy which is being commonly followed is for trending market. If I keep on writing, it will take time. But anyways, if someone watches the video after the classes, he can understand what exactly is being taught. So for a trending market, one can enter on pullbacks. Pullbacks in the sense, if I'm talking about a trending market, if the stock is moving in this direction and there is somehow a pullback, one can enter at this place. This is the strategy which is being followed and can trade in the direction of the trend. Not an issue. It's actually writing would be a little slower. I can just use this. So this pullback can be taken as a trade and can trade in the direction of the trend. Again, as ADX will suggest that this is the direction of the trend, I will show the chart how exactly it is suggested. So trending markets, first thing is, can enter on pullbacks and can trade in the direction of the trend and trade in the direction of the trend. So I think everyone might have written this. The second one is, it's for in trading market. So for trading market, what it suggests is one can trade in reversal either on support or on resistance. It is little bit difficult to find all these things unless and until you are into practice. In a trading market, what happens, what it's suggesting is one can trade on reversal either on support or resistance. If this one is a trading market and this you know the resistance and this one being the support, so what ADX is suggesting, one can trade from here to this level either, or from here to this level. In trading or range bound market, another very nice use of ADX is it is actually being used with RSI, which we have already covered. It is actually very effective if it is being used with RSI. RSI is something which gives you signal for overbought and oversold. So if it's being used with RSI, it also gives very nice indications. So now these three things which I have mentioned now are the major strategies being followed. Under this major strategy, you can find few deeper strategies, such as, let me first show you the chart which I have taken from Zerodha. Okay, let me open this one with paint. So it's, is it clearly visible to everyone? So here you can see I have already applied the ADX. The application of ADX is very simple. You can take this one, just a minute. ADX, something which comes in the very beginning. Yes, ADX. The default setting is to be taken, and trial and error is to be done by you. So taking ADX here, you can see I just opened this one just to convey what exactly the lines suggest. Here you can see the positive directional indicator is the green one, the negative directional indication is the red one, ADX is the white one. So please remember this one, so it will be very easier to see here. Okay, from now please start writing uh, the deeper strategies based on the above three strategies which I have mentioned. The first one is ADX below 20 indicates absence of trend. So one more thing I forgot to mention is ADX, as we have said, ADX travels from from 0 to 100. It fluctuates from 0 to 100, and three more things we have to keep: three horizontal line, that is one in the in 20, the other in 25, and the last one is 50. Actually, what is being commonly said as ADX below 20 is a range bound market. It does not show any trend, and ADX above 25 shows a strong trend, and ADX above 50 is the strongest trend, but it is usually not seen in market. So these three lines which I have taken is being drawn by myself. So here also you can see, you can draw these lines. Here 25 and 20 are being drawn, and one more line is to be drawn, that is 50 horizontal line. So the first one which I have already mentioned is ADX below 20 indicates absence of trend. So please focus on this area where ADX was traveling. ADX was between below this line. So it was what it suggests is ADX below 20 indicates absence of trend. So here also what we can see is at this range it was definitely a range bound market. There was no movement. So it is going by ADX strategy. The next one is the next one is ADX above 25 indicates strong trend. So this one is the 25 line. So you can see here ADX is above 25. So you can see that there is a strong uptrend. The third one, which the strategy which is being conveyed, is increasing ADX value above 20. Increasing ADX value above 20 indicates increasing trend strength. I'm not telling about a bearish trend or a bullish trend, but increasing ADX value above 20 indicates a trend strength. Is whatever the strength may be, it indicates that yes, the trend which is being carry forwarded is strong enough. So in this case you can see that is the above 20. Here you can see it is above 20, which indicates a strong strength. Here it was a range bound market and again it came down, but from here when it started rising and ADX was also continuously moving up, you can see till this level it moved. The fourth one is ADX crossing over 25 from below. ADX crossing over 25, this 25 line, ADX crossing this 25 line from below, from any point like from 20 or less than 20. But one more thing to keep in mind in this case, ADX crossing over 25, first write down this one 25 from below, and the special case is if it was under 25 for suppose 20 to 30 candles. So let me find out the case here. Let's take this one. It's above 25, and what it's suggesting, it should be under 20 to under 25 for at least 20 to 30 candles. So definitely there are 20 to 30 candles for here. What it suggests is it indicates that the price has broken out of range with sufficient strength. So clearly it signal, you can see it how clearly it is signaling that it was this period was below 25 for almost 20 to 30 candles, and this was a trading yes trading market, and when it rose above this level, it says that it broken out of range with sufficient strength. See the strength of the trending market. Now coming to the fifth one, ADX above 50. This is which I have already mentioned earlier also. ADX above 50 indicates extremely strong trend, but it's very rarely seen. ADX traveling above 50, and now it's like ADX above 50 is somehow what is being said in the market is like you can place your trade without any fear. But again, market is king, we cannot trade with a single indicator. So the sixth one is ADX crossing below 25. ADX crossing below 25 from above. It's not crossing yes, below 25 from above. Again the opposite one which I just said right now, uh, for broken out of range with sufficient strength. This is the opposite of that. ADX crossing below 25 from above, especially if it was above 25 or 30 for 25 to 30 candles. this indicate that now the stock can be in range bound. In that case, what we saw is like it was in range bound and it moved to a trend. And in the other way around, suppose we can take this one, but it's not clearly, it's not happening over here, but still it can be taken. Like this period, ADX was above 25 and it traveled below 25, and this period's candle was almost 25 to 30 candles. So I have taken a daily chart. Actually, it works very finely in daily chart. Actually, all my research and all my analysis are based on daily chart and 30-minute charts. So here, what I find, what we can found is that like ADS was above 25, and it was within the candle for 30 to 25 to 30 candles. Now, what we can see is it says it comes from a trending market to a range bound market, and you can see when it was below this one, it came to a range bound market. But never to say this was not a proper trending market, it was also being a range bound market. So some, this is where the market, why we say the market is superior. Few indicators doesn't work. It may not be working in this case, but as it is being a strategy, this is being strategy just because it works in maximum cases. So a single script cannot tell you the success story of every strategy. You can find it, please, as I'm saying to write all these things just because you can take your own chart and start finding all the strategies where it is being working and trade accordingly. The seventh one is ADX value pulling back below 40. It is also normally doesn't happen in the market. ADX value pulling back below 40 indicates trend getting exhausted and likely to reverse. So what exactly it is suggesting, if something is above 50 or above 40, if this ADX was above 50 and pulling back to this level, then if at all it was a uptrend, then it says that this trend is being exhausted and may reverse from here. Reverse in the sense it can move to a downtrend. So normally, as we cannot see this in normal market, but yes, definitely we can try and find. The eighth one is trend is seen or predicted to be in uptrend when the positive directional indicator line is above the negative directional indicator line. So it's actually a very like little bit complicated calculation. Please note down this one. When we can see, when you can tell that is it's a uptrend, only writing uptrend, just let me write down for. So what exactly it is telling, to find uptrend, what are the setups required? It is telling that positive directional line, the positive directional line above should be above negative directional indicator, and ADX should be above 20. Positive directional line should be above negative directional and ADX should be 20. So let's see this one. The positive directional line is the green one, the negative is the red one, and ADX is the white one. So positive directional line should be above the negative directional, suppose this case, and the ADX should be above 20. So here it's satisfying all the requirements at this point. The positive directional line is above the negative directional line. The ADX is also above 20. So it says it's a uptrend. So you can see from exactly this place, it started moving upward. Again, please do not take these sessions or these calculations into, like, you are seeing the next exact next moment is little bit downward then moving up. So how to place these stop losses? A single indicator cannot tell you all the story, or the exact setup for the market, where to enter, where to exit, and what should be your stop loss. So that is why there are different kinds of indicators in this market. That is why there are different kinds of price actions and chart patterns are available. So combining all these things, open interest, what is actually increasing the volume factor, combining all these things, you can place your trade. So if at all you are trading for 5 to 6 points, then all this can be used. And the ninth one, we have covered 8. The ninth one is trend is seen or predicted, the opposite one, predicted to be downtrend when the positive directional indicator line is below the negative directional indication line and ADX is above. The only change over here is the positive directional line should be below this one. Suppose you can take this point, but the ADX is not above 20, so it's not possible to find. The positive directional line is below. Suppose this case also, the positive directional line is below, ADX is also 20, and you can see a small downtrend over here. So be it a 100% success, or somehow 20 to 30% success, but yes, definitely ADX is a kind of indicator which normally works. It's not like stochastics, RSI, which only says about overbought and oversold positions. It is actually the calculations are deeper. So it what I felt is it's a good indicator and is commonly used and it works. And the next one is when the ADX when the ADX is above 20 and positive line crosses over negative directional line, buy signal is indicated. So here ADX also gives a strategy to buy and sell. It may not be that powerful, but yes, ADX also gives a buy and sell signal. To repeat again, when ADX is above 20, uh, please listen carefully to these setups. When ADX is above 20 and positive directional indicator crosses over negative directional indicator, it's a buy signal indicated. So where we can find this one, ADX is above 20, this particular positive directional indicator crosses over the negative one. The positive directional crossed over the negative one at this particular, and here you can see it. If you match, it's given a buy signal over here. So you could have traded for almost, it's almost for a 50-point movement all given. uh, no one trades using ADX for a 50-point movement, so it's more than enough. 10 20 no, max 10 point is maximum, I think. So using a single indicator, if someone is trading 5 10 points is maximum. And now coming to the next one, which gives a sell signal when ADX is above 20 and negative directional indicator line crosses over the positive one. It's exactly the opposite. Even pin bars, what Prabodh sir is suggesting, even pin bar is suggesting. I could not get you. Can you please repeat the question? What exactly you were asking? Even pin bar showing at crossing point. Okay, okay. So actually, between August and September, yes. Actually, what exactly you are showing and what is your takeover from pin bar strategies? Actually, I think you have taken pin bar something differently. Pin bar does not give a buy or sell signal directly. Pin bar is just a method to use in chat patterns. Okay, anyways, we'll be covering the pin bar also. In that, we can know in details. So, almost every setup is completed. If someone have written all these things, you can share the information in the WhatsApp group itself. So, now we'll be moving to, we'll be covering MACD. So again, MACD is also a very popular indicator. As many of you might be knowing that yes, MACD, might have heard about MACD. It's not that MACD which we go for eating. It's MACD. It's normally being pronounced as MACD in the market. So coming to MACD, MACD is something which is moving average convergence divergence. We have few pending indicator setups for
We have covered this, I think. MACD we have covered, right?
MACD. Actually, I asked it before the class. Everyone suggested that MACD is not covered. I also feel like
Actually, what?
MACD is not
See, it is
covered.
like a red and blue line, and they're crossing off those convergence, crossing off those two lines, right? Short. Uh, there is like
Exactly,
small, like.
exactly. But I think you might have learned from somewhere else. But
Yeah, you have covered Sirish. I'll check the video. I think you have covered already. Rajesh, do you remember we have covered that?
even I'm confused. Like MACD is
No,
not.
no, it is not covered. Basically, we were covering some other indicator, and Sirish mentioned that it will be combined with MACD, and when he covers MACD,
Hmm.
that will be explained. So I'm just looking back to the notes to see what was that to combine with MACD. One moment.
MACD. Okay.
But MACD was not covered actually. It's not covered.
Okay, then Sirish, we can go ahead. Matlab, we'll not waste time. Sure.
Okay, okay, okay. Not an issue if at all it is being covered. We can listen once more. So MACD is something which is very popular in this market, that is moving average convergence divergence. It is again a lagging indicator. It is a lagging indicator. As said, it is one of the most popular indicator in technical analysis, as it is damn easy to place, to use, and it's also being said as it's very reliable indicator. So now coming to MACD calculation, MACD, what MACD does is it's a subtraction between a long-term exponential moving average to a short-term exponential moving average. Not moving details again to the calculations. Usually a 26 days exponential moving average and a 12-day EMA is taken into consideration while calculating. 9-day EMA of MACD is used for signal line. So now coming to the chart so that I can tell you what exactly it is telling. MACD I have kept also. So MACD is having two lines, you can see. The white one is the MACD line and the red one is the signal line. Okay, okay. uh, MACD is the white one and the red one is the signal line. We'll be moving into deeper what exactly the signal line is all about. And the charts which you are seeing over here, all these graphs, the green and the red ones, are called as bar graph or histograms. This is also used while trading. Let me open this one with. So coming to MACD, as MACD basically, what MACD does is it compares exponential moving averages of different periods and thus is used to indicate both. It's even similar to ADX. It gives indication of change in trend as well as it shows you the momentum. It gives the momentum. MACD, I think Ajay sir, you might be in the trading Pathshala group where recently I have covered this topic.
Yeah, I think so, yes.
So now what MACD, the difference between MACD and signal line is shown as the bar graph. The bar graph which I was telling, this one, or the histograph, is the difference between MACD and the signal line. So again, to write down few strategies which is being commonly followed in this market. The first one is a bullish signal line crossover. Bullish signal line crossover is something when MACD crosses over signal line from below. So now you can see what I said is MACD is the white line. If MACD crosses over the signal line, the red one is the signal line. If MACD crosses over the signal line, it is a buy signal. At this point, you can see MACD crosses over. And to mention one more thing, while you all are drawing charts or looking to charts, when placing all these indicators, please draw these lines exactly what exactly what exactly it will help you, like indicating yes, this makes the chart looks very nice, and it suggests if you are showing to someone else, it suggests like yes, you are known to this technical world and you know how to place your charts. Normally I do like this so as to everyone looking to the my charts could convey yes, this is where it is being suggested. So at this point of time you can see as being the common strategy, it's a buy signal over here. So almost a movement of another more than 100 points. So I cannot tell that every time it will be giving such a big movement of MACD, but yes, this point of time it has given. And the second one is bearish signal line crossover. When MACD crosses below signal line from above, so again a bearish signal here, MACD signal line crosses the signal line from above, it's a sell. At this point it suggested a sell, but see what exactly might have happened in this case. It suggested a sell from here, but it moved to almost a 30-point movement is already given. Again it came back to this level. So few traders might have panicked in this area and may have hit their stop loss. So this is where it comes into consideration that you cannot trade using a single indicator. It can one more thing it can be seen is it, it is also that you can see the histogram here itself, the histogram or bar graph, anything you can tell. Histogram which is 0 at the time of crossover. You can see whenever MACD line crosses the signal line, at this point, be it this point also. What it says, histogram becomes 0. Here you can see this value has become 0. No candle is forming here. Here also it's 0, and here also it's 0. So what it suggests is histogram actually suggests something in advance, that is a crossover may be approaching. So when can you see that yes, the crossover may be happening? It is like when the histogram is getting narrower. When the histogram is getting narrower, you can see that yes, that might be a crossover. If histogram starts widening, it indicates the trend is getting stronger. So these now coming to the crossover part, is this clear what I said right now about histogram, like how to? Okay, so now coming to the crossover, one is bullish zero line and the other one is bearish zero line. Zero line is this one, the line here. This is known as the zero line. Bullish zero line crossover should occur when it is a bullish zero line. Please concentrate on this. This one is the bullish zero line. When it is below this one, when the graphs are below this zero line, it suggests a buy signal. So at this point of line, it crosses over and it suggests a buy signal from here, and it move to upward level. Okay, I'm just repeating all this again. Just a minute. Again from main signal. Rajesh, again, how do you place trade in the sense? Can you please unmute and ask the question directly?
Yes, Harish. When you apply MACD in Zerodha, let's say, Histo is not part of that setting, right? You add one more on top of MACD, or is that part of MACD?
No,
How do you enable Histo?
no, that is a part of this setting. Let me show you.
Okay. Yeah, please. Yeah.
So here, if we take MACD, here it is. So increasing bar and decreasing bar are already given.
Okay, got it. Yeah.
So what exactly I was telling about is bullish zero line crossover happens when MACD crosses over zero line from below. It's please write down this setup. There is a third setup which I am explaining. Bullish zero line crossover. The setup is bullish zero line crossover. It happens when MACD crosses over zero line from below. So as this one is MACD line, let me come to this part. As this one is the MACD line, this white one, what it is suggesting is when we will be knowing that it is a bullish zero line crossover when it crosses over the zero line from below. This one is the zero line, it crosses over this one from below, then it's a buy signal from here, and you can see from here it was a buy signal, and it moved to this level. And bearish zero line is something which it crosses from above. It's a sell signal. Suppose this portion MACD line crosses the zero line from above, and it was a sell signal. Sorry, and it was a sell signal. It keep on a trading market for few days, but again it came down. So it was not that effect, but again you can see here, like at this point, it was a crossover from above and it came down. So that's all for MACD. There is two more setups for MACDs also. That is bullish MACD divergence and bearish MACD divergence. It is not that difficult, but I would not tell this setup now because we haven't covered the divergence part. So a single class would be there for divergence, and all these time frame for MACD which is effective is actually a 30-minute chart. But if you really want to trade for longer periods, because not Rajasthan, I actually do not cannot predict like exactly for how many points people trade. Because if you are a trader and trading for uh, 5-10 points, I don't find it is effective for trading for 5 to 6 points. What basically I do is I always apply my techniques in a daily chart, whatever the techniques may be, whatever the indicators may be. I do not take a trade unless and until I see a bigger movement. If at all there is a bigger movement with proper stop losses, I go for the trade. So for suggesting,
True. What I meant with sorry, Suresh. What I meant with my question is, I
like
mean,
what
usually with
exactly.
other indicators, it is suggested not to use with 5 minutes, 30 minutes, 1 hour. So it is always effective with longer the time frame, etc. So MACD, does it have any constraints like that?
Yes, the minimum time frame is 30 minutes. Actually, to be very frank, I'm in this market from last 4 to 5 years. But what I have found is exactly is intraday trading is something which is almost similar to gambling. It's not like any of these would work properly in intraday trading. It is rather very difficult to find how much momentum. Actually, the momentum uh, traders, suppose a script is already in upward trend and you are catching for few more points, then it's good for intraday. But unless and until you are a short-term trader, a positional trader, then your gain cannot be in multiple labels. Okay,
Yeah.
anyways, we have covered two more indicators, MACD and ADX. So today one more topic. Let's cover this topic. We cannot cover this topic today itself. Will be the next topic is Elliott wave. It will take 2 classes. So what I'm thinking is we'll be covering few parts today, and the next we'll keep for next class. But before moving to the next class, everyone need to find make your eye acquainted to Elliott wave pattern. Whenever we'll be right now, I'll be telling you what exactly it is. So before moving to the next class, I want to give everyone time so that you can make your eye a pattern to look after how actually the Elliott waves are looking, and with a naked eye you can see that yes, this is a Elliott wave. It is conforming with Elliott wave or not.
Sirish, before we continue, sorry, you had mentioned combining or merging OBV with MACD or divergence, only divergence. It will be more powerful, and you had mentioned when MACD is covered, you'll also uh, show or display how those are combined and what the setup or strategies could be
Yeah, I
to
remember. I
mix
remember
OBV
that
with
that
MACD.
all will be covered after completing divergence. I have noted all these things. I'll be covering all those after completion of divergence.
Okay. Okay.
So now coming to Elliott wave, it is actually Elliott wave is not basically said as a indicator. It is a analysis itself. So just a minute, let me. Elliott wave analysis is based on theories of trend and correction. So Elliott wave is something which is majorly used for longer trades. It can be used for shorter trades, but the major part is being used for longer trades. So now coming to Elliott wave. Elliott wave is analysis based on theories of, please if possible you can write all these things, trend and correction. So it is very commonly used in index, be it Nifty, be it any other index, Bank Nifty also. So trend and correction. A lot of as I said before also, a lot of swing traders use Elliott waves. So now coming to few calculations. It's not calculation, all these are theories. So it might be little bit of boring in the initial part of Elliott wave, but the theories which I will be explaining now in bits and pieces will be combined together and will be used in Elliott wave analysis. Elliott wave is something which you cannot find in Zerodha, or it's not like an indicator which you just applied and you got. Wave is used with Fibonacci, with pivot points, or with news to find out what exactly the stock or the script is moving according to Elliott wave analysis or not. So Elliott wave is itself, it's not an indicator, it's an analysis which is being used with Fibonacci, which is being used with pivot points, which is being used with news based. Now coming to today we will be covering almost all the theories behind the Elliott wave. Next the Fibonacci usage of Elliott wave will come into consideration. Then only you can trade using Elliott wave. Elliott is a very popular method, so it can be used as a trade. And for this Elliott wave I can say, as Elliott wave is being used with Fibonacci, I can say Elliott wave itself is a trading like tool, may not require any other trading tool with Elliott wave. So it's that is why it is like you might have heard about Ichimoku itself is a trading tool. So now not wasting more time, we'll be moving to Elliott wave. But as suggested, it has two things. One is trend and the other one is correction. Elliott wave is a theory of trend and correction. But what makes Elliott wave really more powerful is the fact that along with trend and correction, you add labels to Elliott wave. So the yes, definitely, it's indicate the psychology of the market also. I'm coming to that. Just have patience. So the precision of these labels make Elliott wave such a popular tool, and it's used by experts everywhere. Uh, like who are actually experts in this market are involved in using Elliott waves. It's being developed by Nelson Elliott. I am forgetting the first name. Anyways, it's being developed by Nelson Elliott. Okay, okay. Ralph Nelson Elliott is the developer. Should not miss the first name. So from here the name comes as Elliott. Now coming to, as said by Surajit sir, that it takes psychology into consideration. Yes, apart from trend and correction plus labels, it also determines the psychology of the market. It also tells you the psychology of the market. Now coming to, please focus. Now coming to the major part, Elliott wave is further expanded into two more waves. Now what we have studied till now is Elliott wave, Gibbs trend, tells us about corrections and the psychology of the market. Now coming to Elliott wave, expanding further, Elliott wave have two more waves unto it. It would be difficult to write as, because I cannot rub after this, because all this will be needed. I will be covering in bits and pieces. All this needs to be combined. Elliott wave has two more waves. The one is impulse wave and the other one is corrective wave. Impulse wave and corrective wave. So every Elliott wave or every composition of Elliott wave predicts, or you can say in other word, like every Elliott wave or a single wave, if you consider, predicts the fact that every action, it goes by the fact that every action has a opposite reaction, that is impulse and correction. To decompose it furthermore, to understand what exactly it is suggesting, let's go to the basics of what exactly it is telling. We should not rub this one. Okay, not an issue, we can rub this one. So as we have already studied a main trend direction and a reaction within the trend, and then we have correction. So let me draw first what exactly Elliott wave looks like. So before, suppose let me take 1, 2, 3, 4. Suppose we join these points. So this is what Elliott wave is suggesting. This is this, if we join this one, this to this level, it's a single line, it's a single direction, single trend. This is what is considered to be as impulse wave as per Elliott. And what happens is this again comes down little more and again comes in. So this is what we have. This is what is corrective wave. One more thing to take into consideration, please mark this one. This is 1, 2, 3, 4, 5. This is A, B and C, so that we can calculate it properly. Now coming to further analysis, what Elliott says that impulse wave can be split into further parts. So as we have seen that this one is impulse wave, the major one is the impulse wave, which I have already said. The dotted line is the main trend. This is the impulse wave which I was telling. So impulse wave, what Elliot suggested, that impulse wave can be further splitted to more parts. That is what I was telling. Impulse wave is equal to 1, 2, 3, 4, 5, and corrective wave is equal to A, B, C. The impulse wave has 5 subdivisions and corrective wave has 3 subdivisions. The bigger picture, what exactly Elliot is trying to convey is, like, the main theory behind what I suggested is like every action has a opposite reaction. So if suppose this is Elliott wave, you will be having two waves under it, that is impulse wave and a corrective wave. Again, impulse wave will be having two more, and this will be also having two more, this will be also having. So this can be, so the main property of Elliott wave is each system is further decomposed, each system is further digged into more. In this Elliott wave, it is being suggested that a train can be decomposed. If suppose this one is a train, this can be decomposed to further more labels. This is what Elliott is suggesting. If you take this label again, this can be again also decomposed. So what exactly we are getting idea by looking into this picture, that Elliott wave, as in the first beginning of the session I said Elliott wave is being used for longer trades, for major trends. This is being suggested because when you will be covering this, you will be knowing why it's being suggested for longer, because the movement is much more. But what Elliott actually is suggesting is Elliott wave can be used to identify most major trend. Suppose let's tell that major trend as super trend to the micro labels itself. So it can be from major trend to the super trend to micro labels. So now we can say that yes, Elliott wave can be used in micro labels also. But as per strategy, as per trading, like from last 1-2 years using Elliott wave, it is being what I have seen is better to use in longer periods. So now what Elliott is suggesting, suppose these are trends, Elliott can be used from most major trend. Suppose we will name this as super trend. It's not the super trend which we are having in Zerodha, to micro level. That means we can use Elliott wave to years or to hourly or even more lower levels. But normally we do not tend to do that with Elliott wave. We do not use Elliott wave for day trading or BTST or for weekly tradings also, because it's simply a very big analysis which is being used. It is not being used for intraday trading itself. You might have been in many groups, many or channels, telegram channels, so many analysts suggesting that a correction might happen. If a correction happens also, this can be the label. All this comes from Elliott wave Fibonacci corrections. We'll be moving to that. So the first, uh, let me explain what is an impulse wave. As we have seen that there are two waves, so now coming to what exactly an impulse wave is. So we have mentioned an impulse wave is a combination of 1, 2, 3, 4 and 5. So suppose this one is the line, this black line is the impulse wave. Please consider this as impulse wave. Now let's decompose this impulse wave into further portions. So this impulse wave again can have these waves under itself: 1, 2, 3, 4 and 5. So Elliot is suggesting again this impulse wave is having further decompositions. So every impulse wave further decomposes to smaller wave. So if you join from point 1 to point 5, you will get the main direction, that is the super train, as per the time frame which you are taking. Now coming to the next part is the corrective wave. These all should be covered in a single page so as we can compare all these things. And as this one was the impulse wave and this one is the corrective wave, so we are taking this part now. So we have an impulse wave and a corrective wave. When you add both of them, the package is ultimately known as Elliott wave. So now we came to the conclusion that this is the impulse wave and this one is the Elliott corrective wave. So if we add this both, you will be getting Elliott wave. Now coming to a few more points. How an Elliott wave looks like. Suppose we are taking
Sirish,
yes,
just to help you,
okay.
on the left bottom, you have a plus symbol, right?
Okay.
Just keep clicking new page. No, not that, not that. Below that. One bar one.
Okay.
One bar one. Those are pages, so you can just add as many pages. So and you can refer back to those pages instead of erasing.
Thank you so much. Sir. So here itself, what now how the chart looks like. Suppose we are taking a chart of Nifty, you will be seeing the Nifty move from in these levels. This is where I was telling your eye should make acquainted of. These are the points that yes, this stock is moving as per Elliott wave. 1, 2, 3, 4, 5, and this one is A, B, and C. So we'll not erase this one, we'll be adding pages from now. An impulse wave and corrective wave works for both bull and bear market. So this is for a bull market which I'm talking, and for bear market it will be exactly reverse. I can draw that also, that for bear market it would look like something, the Elliott wave would look like this one, and the corrective wave in this case would be like this. Again, this is for bear market. This one is for bull market, the Elliott wave looks like this, and for bear market the Elliott wave looks like this. So now let's dig this to further levels. What happens is, just a minute. Do I need to register now for adding pages?
Yeah, better. I mean, if you're registered, it's free registration. If you're registered, you can add as many pages. Yeah, correct. That's true.
So as now I haven't registered, so let's do as we are doing it previously.
Okay.
I will do one thing. I will draw all these things in a single chart and send after the classes, so as you can refer to the chart. So coming to a few more theories behind Elliott wave. Theoretically, we have seen 1, 3 and 5. Now this is why I was not erasing the portion. This is exactly being required. So 1, 2, 3, 4, 5. So please note down if possible. What theoretically it is suggesting, 1, 3 and 5 are known as action wave. These three, 1, 3 and 5 are known as action wave. 2 and 4 are called reaction wave. So this is where the formula come into existence, like on based upon the formula that every action has a reaction, Elliott wave works. This is one more thing you can need to keep in like you can keep in mind. Actually all these bits not an issue, we will cover by this. I'll be providing the details, the diagrams. So now what I'm what I will be suggesting is like all these please keep in mind all these things. The first we covered is the impulse wave and corrective wave. Now coming to the again the second part which you covered is Elliott wave can be used from major to minor, and the third which I am telling is the action and reaction. So all these bits and pieces will come to use in Elliott wave itself. So please take these bits and pieces into consideration and keep in mind all these things. Not to worry, today we will be not covering. So before that I will be sending the diagrams. Now you might have remembered before some time I have mentioned that Elliott wave can be used to major to most major to micro labels. So you might be thinking, why is this possible? Like how come it is possible that a single analysis could be used from major labels to major trend to micro labels? What analysts do is they take Elliott wave at major level and then boil it down to smaller time frames. Suppose they took this one as a major level, suppose a yearly indication of Nifty, yearly chart of Nifty, and they boil down to smaller levels. One more thing I forgot to mention, before Elliott wave, please note down one assignment for Elliott wave itself, because before without these assignments it would be difficult to further move. So you can take 1 2 charts that are enough. What you will identify is how these Elliott waves are structured. You need to identify the Elliott wave structure. So look to naked charts, nothing required, no indicators had to be placed. Look to naked charts and you need to find all these things, how these Elliott waves are actually, suppose a script is actually working with Elliott wave or not. You need to just uh, draw the diagrams. Suppose I take a stock or index, you will see the major suppose we are taking into consideration as Nifty, you will see the major trend to be like this, the total of a Nifty trend. Suppose from this here you take, just a minute, suppose this is the major trend of Nifty we are taking. Suppose from here you take this portion into consideration. What exactly I'm telling you is about the assignment, how to see the or take the assignments. You saw that this is the major trend of Nifty, and you take this portion out from here. This is, you can take the price from here to here, how, and make this a bigger portion and see how this is actually being sub boiled down or dig down to, again you will be seeing a impulse wave forming in between these lines. So this is what you exactly need to see. So what exactly I want to say is, there are many cycles in this market. So you understand the assignments, that finding the major trend, again digging the major trends, like you took this one as the major trend, this one. So dig this the third wave, that is the action wave, the third action wave, dig to further waves, further impulse waves, further waves inside that. So this is the assignment which you need to do. And now what I am saying is, Elliott wave is actually designed in such a way that it takes into consideration all the phases of market. So there are many phases in this market. Like suppose you can say that the major trend can be said as grand super cycle. I will tell you all these cycles. I will write down. The next one would be super cycle, and further to micro labels. So I do not require to do all these things to this level, from grand super cycle to micro labels. Take your part, like from super cycle to intermediary cycle to cycle. I will be telling what are the phases, then according to that you can dig. Suppose you take a 5-year chart of Nifty. We took 5-year charts of Nifty, and that could be grand super cycle for Nifty, or any other stock, whatever exactly you, it's as per your choice. Elliott, draw Elliott wave on that. And again, if you see, if you take a smaller portion, again you can draw Elliott wave on the smaller point also. Suppose it can be a yearly, from 5 years dig to single year, then single years to monthly. That is maximum. I do not require more than that. I am not saying about the time frame. I am telling about the this, for the boil should be done taking into consideration the price, not the time frame. You do not require to change the time frame. You can take a daily chart of Nifty, and please close these charts to, like zoom out these charts, so that it would be narrowed, and see the 5 years time frame. Take the 5 years time frame, you can see the diagram, the Elliott wave, and then take a portion and again zoom in, so that you can take a yearly, then again zoom in to find monthly. I'll be showing in a chart right now how to do this. So as you dig deeper down, you would be able to find micro labels, which Elliott wave is suggesting. So what we will observe is that the more you dig from 5 years to suppose a monthly or even daily. Okay, just a minute before moving that, let me show you a chart. I have already kept that. The theory is little bit intermediary cycle, minor cycle. Because I have taken a chart of Biocon before its split. So this is exactly how you need to do. So you can find, suppose this one is just, this one is 1, 2, 3, 4. This should not be taken into consideration. This one. Okay, anyways, 5. So if at all we join this one, you will find that it's moving as per Elliott wave. Actually, I have seen Biocon from a level of 500 before it split, and it actually was going by Elliott wave. So you can see, and this one is the corrective wave. So I have this one. This is exactly how you need to do your assignment. This one you found, and again I took a portion of this. So exactly again you can see here also you can draw these labels. So this is what Elliott is trying to suggest. 600 label to, okay, anyways, now as per this if you draw from 0 to this one, you will find a super trend. From this super trend you are decomposing. Suppose I have decomposed actually this part to here, and it again gave a Elliott wave analysis to this label. So when every analysis is being done from yearly chart moving down to monthly, you need to understand the labels. This is where labels comes into consideration. How to derive these labels. So suppose this was the major trend and we move to this one. So we should let's take a random number. Suppose this was 500 and this was 540, and it moved down to 530. So this is where a trade is being placed. As you can see, this stock is moving as per Elliott wave. This, you might have heard in the market that everyone says buy in dip. This is where it is being said as buy in dip. It moves here and it would move furthermore because the major trend is following Elliott wave. So trends between these major trends should definitely follow the pattern of Elliott wave. What Elliott says is that this 500 to, suppose this is 530 and this is again 560, this is 555, so, and this should be 600. What Elliott says is that this range from 500 to 600 will have further labels. So again from 500 to 540 you will find, if you dig more down to this, again you will find smaller dips. What exactly your assignment is, take any stock I mean to say, one more thing to mention, you cannot apply Elliott wave on a penny stock because penny stocks doesn't work as per Elliott wave, it works as per operators. So take any liquid stock and place and please place your diagrams and do your diagrams, do your charts in that. Please take liquid stocks which have buyers and sellers involved in that. What we need to identify, here comes the major part, what we need to identify from this is, please focus on these things because this will be helpful in while we'll be doing Fibonacci retracement for Elliott wave. So now you can write down the labels which I'm telling you. One is grand supercycle. The second comes supercycle. It is not like these are mentioned somewhere. It's as per the English wordings it's being made. The third one cycle. The fourth one is the primary cycle. Fifth one is intermediary. The sixth one is minor cycle. Next one is minute cycle. I will be telling why all these things are required. The minute cycle, and the last is subminute. So if someone is, no need to remember all these things, just for your understanding I have mentioned all these things. If some what exactly I want to tell is, if you are taking a trade for intermediary cycle, so you need to understand above two cycles, primary cycle and cycle. What exactly happened before that? Was it following Elliott wave or not? If I am taking a trade for now, for at least I am supposed to take that trade for at least think for 6 months, then I will definitely see what how exactly Nifty reacted for 1 year itself, for previous 1 year, 1.5 year. Does it follow Elliott wave? Does it comes according to Elliott wave? So by that only I can place my order for intermediary cycle. Yes, this is where it is suggesting to buy on dips. This is where a correction is being taken place. So here I can take my trade. So Elliott wave is not like an indicator which you applied and you got a buy or sell signal. It is somewhat you need to see in your naked eye. But again, Elliott wave corrections are made simpler through Fibonacci retracements and pivot, and even news based we cannot study. That is simply because of news. These corrections comes this, nothing works if US suggests a war with North Korea. So no Elliott wave comes into consideration in that. So now if we are going to take a call based on minor cycle, what exactly I was telling now, you need to identify the cycles before that, that is intermediary and primary cycles. Okay, moving, this was the part of your assignment. Now moving to further, remember few things. Wave 1, now we will be understanding, let me draw this one again. This is 1 2 3 4 5. These waves themselves have their own characteristics. So first, wave 1, let's see how wave 1 reacts. Wave 1 is the beginning of the trend, right? Suppose before this one there was a downtrend, and this from here we started. So this is the beginning of the trend. You will find in major cases wave 1 is having less volume and only few traders should enter, because wave 1 is something which is the start of the point. So it has very less volume and only few traders enters here. It's generally found that wave 2, wave 3 is the most powerful Elliott wave. Wave 3 is the most powerful Elliott wave, because few people, as I said, wave 1 there would be less volume, many might not enter, because this could be a risky trader, because the previous trend was downtrend. So wave 1 could be of less volume and it gave correction, so there might be a panicking situation that those who have entered might book here. But again, as it started moving up, so here people comes into taking the position, as they can say that yes, this is going by Elliott wave. So that is why wave 3 is considered as to be most powerful Elliott wave. You can write down these all these things, wave 1 being the least powerful in the sense the volume is very less, wave 3 being the most powerful. And wave 3 you will be finding is having the most uh, volume. The volume is more in wave 3. These theories are all to be put on charts when we will be reading Fibonacci with Elliott wave. All these will be put on charts. I'll be showing you when we'll be learning this. Again, you can see here there was a correction over here from this point. You see how the volume started, and here also the wave 3 is this one. Here you can see the volume. Biokin is a script which I loved just because it followed so nicely the Elliott wave. Okay, now coming to the description of each wave. The wave 1 is known as the trigger. Wave 1 is known as the trigger of the Elliott wave, because here participants are getting into the market. Here the participants who were bullish in nature for this stock would come into participate, but not in much level. Generally what happens, generally what is seen in case of Elliott wave, it is the shortest wave. Wave 1 is considered to be the shortest wave, most difficult to identify even, because it would happen just after a trend reversal. So it is even the difficult one to identify. Wave 1 is very difficult to identify. Now, can anyone of you say that why is wave 1 is difficult to identify? You can see that yes, that there is a trend reversal and you can pick, like yes, now you can pick the stock. But why it's being said as difficult? Okay, let me
because it might be that a corrective wave also, right?
no, no, it was from a position which was previously a, like if it's a bearish trend, it was previously bearish, so it cannot be a part of correction. But yes, you are partly correct, it's a part of correction. The major change, yes, actually here comes the psychology part. Why people it's difficult to find is it's the fear. The fear is the answer of this question. There are very few people who can catch the bottom. You can see in this market itself, it's very rarely found that yes, this is the bottom, from here itself it would move. So everyone would definitely fear that there was a bearish trend following, so it cannot be like it can come more to the down level. So this is why it is very difficult to find the wave 1. Generally also it is being recommended to wait, not to trade from wave 1. There are few people in the market who are acquainted of finding tops and bottoms, but it's actually no theory or nothing like such suggest finding a top or bottom. It's the experience which make you finding tops and bottoms. But what I felt is finding top and bottom is like if you are god in this market, you can find. If you are from a very like 15-20 years experience you're having, then yes, you could know that yes, this actually this script works this like this only. Okay, not to focus on that more. So now coming to wave 2. Wave 2, what happens here is investor or traders who have invested in wave 1, they start to book profit. See, someone who cashed the bottom suddenly starts booking profit at a very minor level because the correction happens. People starts booking profit. Someone who is a trader is happy with this that much of profit, he also starts booking profit and it comes down. Booking profit happens in wave 2. Now a small thing you can you all might be thinking how to identify all this in respect of Elliott wave. uh, it is like you will be seeing all these charts after it is being formed, but how to identify yes, this is the wave 1 and it will be coming to this level and again moving to this level. There is no such indicators in this market, like direct indicators. How to apply all these things, because all these things are being seen which I saw in the chart, it's after the formation, it's not before the formation. So these all, again as I said it before also, these all are to be used in three ways. That is, the first one is the pivot points, the Fibonacci, and the news based. If you find the wave 1, then the second wave, the second one, the correction could be found by using Fibonacci over here. We'll be moving to that. That is very interesting part of Elliott wave. This is how technicians say that this might be a correction and it would come to this level. So Fibonacci with Elliott wave is a very popular method. So just keep in mind or note down this one, that wave 2 correction should not break the starting point of wave 1. This is wave 1 and this is wave 2, this is the correction. This should not break this level, then it does not go by Elliott wave analysis. Ideally, what it's being seen as, it corrects up to max up to 50%. Fibonacci retracement is 50%. We will come to Fibonacci retracement. Max it comes to 50%, not more than that. But to be precise, it should never come to down this level. So this is where the properties of wave 2 acts. Now coming to the best wave, that is wave 3. This is where we are focused on. The wave 3 is the wave where maximum institutional investors, the smart money, the big farms enter. This is where they are convinced that this is going to be as per Elliott wave and this should move to for the more levels, because institutional investors does not trade for this level also, they trade for the last fifth level or even near about 4.5 levels. So this is where maximum people enter, the third one, and you will find volume also in the third wave. Generally it is considered to be as the longest wave, and here you can place your trade and book profit also within that level. Generally it is considered to be even the fastest wave. This move is normally seen to be the fastest move among all these waves. There is no fixed end to wave 3. You cannot predict that this is where wave 3 is going to end. In a momentum it cannot be predicted, but as per Fibonacci extension, it's like you should, what is being suggested, you should exit partially, as there might be a correction after few moments. Once we study Fibonacci, we will know how to predict these corrections and extensions. Now coming to wave 4. Wave 4, most investors starts selling at this point. Most retail investors start selling this at this point, wave 4. That is why, because as we have seen that wave 3 is the longest wave, so it's a definite psychology of this market that after moving to taking this much of profit, a very rare people would still stay for next wave. So this is why exactly there is a correction, because people starts taking profit or starts booking profit. Whenever there is profit booking or selling in market, you know that there is little bit of correction, so people start booking profit. And it's almost similar, the lengthwise it's almost similar to wave 2. Now coming to wave 5, it is also very interesting as part, uh, like this is where many people are trapped. Suppose many people would might not have entered in the third wave, and after correction, when again started moving to upward level, people start thinking that it was just a minor correction and it would definitely move further because it has given again a upward move. So what people start thinking is just a temporary correction for fourth one, and they place their trade, but they are stuck when the movement of fifth wave changes to corrective wave. So this is where a correction takes place, and this correction is not the correction which happens under impulse wave. This is where a major correction takes place. We have discussed in the very first itself impulse wave and corrective wave. So this is where corrective wave comes into play. Now coming to again wave 5, as I already discussed, wave 5 is a trapping wave, you can say, as people think it's a pullback and correction starts. So for it is advisable to avoid wave 5. It's better to avoid wave 5, but again everything depends on market. As market is superior, it's not like every time you will be seeing this correction happens, but maximum time you will be seeing this correction happening in the market. If again in a case of Nifty also, we found like uh, I already said that three things are taken into consideration: news, pivot, and Fibonacci. We have found that many times news have made this correction, but not that major correction uh, happened till now. It's still pending. So now we have understood the impulse wave part. Now coming to the corrective wave. This one is the corrective wave which we'll be discussing. Now coming to this corrective wave, let's discuss the wave A first. Wave A should never be bought. Here a buy on deep strategy should not be followed. You cannot say that yes, this has corrected to this level and we can buy on this level, because a corrective wave is something different and impulse wave is different. So how to identify a corrective wave? Now please focus on this picture. Now this is the impulse wave and this is the corrective wave. Wave A matches the label of wave 4. This is actually wrongly drawn. This is exactly how it looks like. Wave A matches the label of wave 4. This one is 4, this one is 5. So matches the label of wave 4. It's not like exactly it would be touching to this label and correcting. It is almost a Fibonacci retracement of 80, more than 80 points, 80 percent. Counter the main trend. It's actually, you can see this trend counters the main trend. Here it does not. This corrective wave does not counters the main trend, but this corrective wave counters the main trend. The first place to panic is the wave A. Wave A is the first place to panic, and it so for that itself, it is being said that it corrects up to the label of 4. So this is about wave A, how to and how to even identify that, how not to place or not to being a part of this trap. Wave B. Now coming to wave B. Wave B counters the fall in trend and inlies with the main trend. Now coming to this wave B, suppose this one, this is very interesting. This came to this one is wave B, and here what it wave B is doing, it inline with the main trend. This was the main trend and it's inline with this one. But the strategy to be followed here is not a buy, it's a sell on every rise with a sell above 5. Again, Elliott wave is not for day trading, it's for bigger. Like if you are suppose entering a position here in a FN segment, place your SL as per the spot of a stock here, and you can sell on every rise as per Elliott wave analysis. Now note down one thing. In Elliott wave, price is the king rather than time. Why I mentioned this one, you will be finding like this is wave 1, this is wave 2. Wave 3 can take a longer time frame, and wave this correction could be like this way. It's all, it does not take this shape always. It can be of a different shape. This time frame can be changed. This might be a wider, this one might be a smaller time frame. This may take a little bit extra time, but here the time is not the factor. Elliott wave is totally based on price. It takes price into consideration. So wave now again, as I have already said, wave 3 has to be the longest. Now you might have been noted down that Elliott wave takes price into consideration rather than that is what I was doing, time. It takes price into consideration. So this is all about the impulse wave and corrective wave. So here we'll be closing the session. What we'll be doing tomorrow, I'll inform in the morning itself. Actually, wave C is the confirmation wave. Like from wave C, you will be finding a it's already confirming that the trend has reversed. and after wave C, again it comes to the trend reversal, finding the wave 1. So this wave C is again, as wave 5 is to be avoided, this wave C is also to be avoided. You will definitely book your profit in wave C, as you have taken like this one was at this level. Said that buy sell on every rise. So this is where you need to book your profit. This can change again, supporting Elliott wave analysis, or this trend might fall, because we do not have options of sorting in cash segment. So you need to book your profit. Max you can hold for 3 months by rolling over. So I need assignments from everyone. Please, we should not we can take the assignments in WhatsApp group itself, but it would be better if you post this in mail itself. And after that, after being acquainted with these patterns of Elliott wave, we'll be moving to Fibonacci retracement with Elliott wave. So now if it continues to wave 6, then it is not to be said as a Elliott wave, a confirmation with Elliott wave. It is a momentum again comes into play. Again, that is where the strategy comes, like market is king. We cannot stop a trend to move furthermore.
Okay, but suppose if that happens,
Yeah.
Maybe we may be watching intermediary cycle or a primary cycle. Still, the previous cycles hold good. I mean, will it be valid Elliott wave or a complete? How does that happen? I mean, I'm not getting that
No,
part.
actually, what you are trying to say is, like, if previous cycle is having 5 major waves, is that like smaller periods will be having the same 5 waves or not?
No, I mean, that's what I understood. Every cycle will have the same pattern of 5 waves and ABC corrections, and again 5 waves. That's when it will be called as Elliott wave, correct?
Yeah.
Okay, so suppose we are in intermediary cycle or a minor cycle we are watching. Okay, and the Elliott cycle is not formed. After 5, again it makes
A
upward
6
trend and
movement. Okay.
makes 6, 7, and 8. So correction didn't happen.
No.
Um,
In that, what exactly Elliott wave is suggesting to take a trade, if all of these things are taken to take a position in the market, either a buying position or a selling position. What it is suggesting is you need to take your position a third wave itself, and need to close the position before fifth wave. So if at all you are taking a position on sixth wave, it should not be based on Elliott wave analysis.
No, correct. But my question is, suppose after 5, it doesn't form ABC.
Okay.
Rather, it will continue to make 6, 7.
Okay.
So, can I say it safely that intermediary cycle is not an Elliott wave, but up to primary? Or
Definitely, you can say that it's not with Elliott wave.
So
Because
the
Elliott
stock
wave
is not moving as per Elliott wave. That's what they. Okay.
Exactly, it is, because Elliott wave would definitely have a Fibonacci retracement and correction. This is what
Okay.
Elliott
So,
says.
but previous cycles are following Elliott. Now suppose after 6, 7, it makes a correction, and then again it starts making 1, 2, 3, 4, 5.
Yes, this is where exactly I said, if you are watching a minor cycle, you need to understand what those previous cycles were doing. It rarely it happens in the market, like if a minor cycle is not following a Elliott wave, the previous cycles would follow the Elliott wave. If you find that previous cycles are following a Elliott wave, then definitely in maximum cases you will find the minor cycles are also following Elliott wave. It is a very the ratio is very less.
Okay. So there is no chances of similar to false signals there are very less chances, is what you're saying. Okay,
Yeah.
but I'll watch some of the scripts and then try to understand
Okay.
more. Thank you.
So we'll be closing the session here. Tomorrow's session, please, I'll inform you because I have planned something else. So if I will come back in time, I will be taking the class, or else I'll inform tomorrow itself that we can take another class in. We can take a longer session in next week.
Also, one more question. I mean,
Okay.
this one on the open interest, there is still an advanced level. So when is that planned by Nishant? Last week the open interest session is not complete, right? So
Yeah.
Nishant was mentioning there's an advanced level also. So
What
when is that planned, by the way?
actually what I was not into the class for full time, but what I uh, what I knew is like he is planning to take the class in January. But again, I will be suggesting to take that class in between this, because if there will be gap of 1 month, then there would be no use of knowing this before this time. So
Okay.
or else
Others can confirm if my understanding is right. That's what I still remember, and I was thinking today would be a continuation of open interest, is what I was
okay,
thinking.
what I
But
would
that's fine
suggest
now.
is please you can do one thing, like you can ask Nishan to continue this class in a like next week itself, or at least in this month or next first week of December. Even I feel is like if this time, if you are learning the uh, I mean the basic levels in this class and going to the advanced level after January, then it would be difficult to understand. So I will be also suggesting Nishan to take the classes in December first week or even this week itself, and you all can also confirm. So
Okay. Others, I mean, Ajay, is my understanding correct from last session, if I'm not wrong?
Yeah, Rajesh. I think, but same thing like what you mentioned. He told we will dive into advanced topics, but timing he didn't mention here. I think he said we will check this later, but like you said, there was no confirmation when he will take it, whether now. But I
Okay.
also had the same understanding like you, like we will continue in near term only, because otherwise it will be difficult for us to like recollect whatever we have already done.
yeah, exactly. I was also thinking of that. Yes, it should be continued in near sessions, or else it would be difficult to remember. Anyways, I will be suggesting Nishan to take these classes in near days. So, and you also can suggest.
And Shirish, one more thing actually, Nishant told that you guys will add us, all of us, to the broadcast list what you have on WhatsApp. So can you please help in doing that? Actually, I told him, I asked him like twice, but I think he will be busy. So if possible, can you please do that?
Broadcast in the sense the calls which are being provided.
WhatsApp group, the WhatsApp group.
Okay, no issue. I will be telling him to add that.
Okay, sure. Thank you.
Welcome.